Hello guys and welcome back to the channel. So instead of me just hopping into the charts and telling you a strategy to use to execute trades, today I'm actually trying to make you guys avoid executing trades, right? Why? Because it's not every time that you're supposed to be in a trade, and it's not every trade that you're supposed to execute, right? So when we look at gold right now, you can see that it's kind of just consolidating, but we are in an uptrend, right? Yes, gold has been an uptrend for a very long time, and last week these buys right here are still pushing all the way up. Now, we've already taken first and second TP, and we are still shooting all the way up. It's very, very good and it's very, very nice. I still intend to keep this trend pushing. You realize that we don't have really any serious price movement. This was the only level I could have added in a trade, but we did not take this high right here. I just wanted price to take it. And after price took that high, there's absolutely no reason to add currently. If I get a reason to add, I'll probably add into more trades, right? But what I'm trying to teach you guys today is very, very simple. This is a trend. We can see that yes, price is in an uptrend on the 1 hour time frame. And we can see that this is quite nice. We should also be buying all the way up, right? This trend looks very, very good until it doesn't, or until I actually point out a couple of things that is wrong with this trend and why you should either avoid trading this trend or you should do what? Actually consider trading this trend, right? So first things first, we are in an uptrend. Any single time, every single time, and every single day that you come into the market, do what? Try best and mark your levels, which is your highs and your lows. So first things first, we have our last low right here, and obviously we have our last high right there. So these are our swing highs. You can obviously see the price is kind of in on a trend line, right? So price is kind of on a trend line. A trend line is just basically price telling you that we are still making higher highs right there. So you can see that we are still making higher highs, and higher highs right there. So that actually indicates that buyers are still strong in the market and they can still push price all the way up. So most people that actually trade trend lines, when price actually dropped back down and hit this zone, they could have already been in the trade, right? They could have already executed their trades around this zone right here, and they'll probably be targeting this last high right there as their first TP, with just the last low of the trend line as their what their stop loss, right? But I told you that I'm going to actually mark out what is wrong with this particular trend. You see, this trend currently is showing a lot of things which indicates a consolidation. You might not look at it as a consolidation, but let's start figuring it out. This right here is our last what trend. This right here is our last price movement. What did that price movement do? It took out this last high right here, giving us a BOS. Price is still in an uptrend. Nothing serious is happening. But when you look closely, price actually gave us an inverted fair value gap around this zone before pushing all the way up. So a lot of people who trace inverted fair value gaps will have actually be waiting for this pullback down to execute a trade right here all the way up again, right? Because of course we are currently in an uptrend, so price is just going to continue shooting all the way up. That's very nice. But in price doing so, in price coming back down to this zone to actually do what? Pull liquidity from this inverted fair value gap, it gave us another inverted fair value gap around this zone right here. You can see what is happening. So price gave us inverted fair value gap was coming down. Price gave us inverted fair value gap was going up. So this now indicates and this now tells you that the whole of this range, right? So from here, let's say just from here all the way, I wanted to use something different. I think this is not it. All right, so let's use this. So which actually indicates that from this whole zone right here, price is consolidating. There's nothing serious happening. That right there is just a consolidation. You shouldn't be looking forward to executing a trade anywhere within this zone right here. The only place you should be looking forward to executing a trade is one, if price takes out this last high right there. So I did not pick this. So if price takes out this last high right here, you can execute a trade because you know that sellers came in about this zone right here, from this level right here all the way down. This is where sellers came into the market. So if price could beat those sellers that came into the market around this zone, price is obviously going to continue pushing all the way up. But if price cannot do that, that obviously means price is going to change character and we are going to be looking forward for a downward movement. And even if you're asking yourself, are there any sellers in the market? Stop it, because you can obviously see that there's an inverted fair value gap here, indicating that yes, there are a lot of sellers inside the market. And price could have equally be doing two things. Price could have equally be coming down to just retest this inverted fair value gap before a continuation, or it could also just hit this resistance zone, which is the trend line, and is retesting this fair value gap to now come back down and push through it. So with this, you only have two levels to execute your trade. One, if price breaks above here, you are executing a very nice trade, right? Very, very simple. The second trade is also simple as well if price breaks below this zone right here. Why? Because as much as sellers came into this market around this zone right here and pushed price down, buyers also came into the market around this zone right here and pushed price up. So this is just kind of in a circle. It's not going anywhere. Price hasn't gone anywhere yet. So all you need to do is just take your time. Don't be in a hurry to execute a trade. You realize that after understanding this, we've now eliminated every reason why you should be executing a trade within this zone right here. It's now gone. So within this range, you don't really care for it that much. You don't care whatever is happening within that zone. You don't actually care about it. What you care about is if price breaks below this or above that level right there. So this is just what you need. That is all. And you are waiting for price to do what? Finally come down to those levels for you to actually execute your trades. So when you also look closely at this zone right here, what happened is even though price came back down to this zone and sellers did what? Short price all the way up. This is actually a reason, or this is actually a region where buyers and sellers actually met. You can see a retest, you can see a what? A rejection. So even if price drops back down and break through this level, executing trades around this zone will probably mean that you should actually consider putting your stop loss just above this zone right here for you to be safe in any case price is trying to do a rejectional move, right? You can be safe with that, so you don't actually get stopped out. That is very, very good. Where should you actually put your first TP? Now this is not really a big deal. You can see that yes, sellers and buyers were just rallying around this zone. This is the last low of this whole trend line move, and price actually left a lot of buyers below this zone right here and a lot of buyers again. Now this level was actually an inverted fair value gap. This level or this zone right here was actually an inverted fair value gap. You could actually use it as your what? Your TP level. Also, it's just a normal fair value gap. So yes, that is also just a good thing. So when price actually comes into the fair value gap, you should be looking for some reactions within this zone right here. So you can put this as your first TP, and you'll probably be looking for a place where price has rejected a lot, which is this zone right here. You can see first, second, so third rejection right here. So around this zone could obviously also mean you should put your second tip, or should be looking for a rejection just within this level right here. And that is it. You don't have to do anything. You just have to wait for price to give you either this or that for you to execute a trade. If price takes out this, which is if we have a candle closure above this level right here, all you need to do is execute your trade. Find a level where there was enough buyers in the market. Where is a level that there were enough buyers? You can see it just around this zone right here. This shows sellers coming into the market, but a lot of buyers actually pushing sellers all the way up. You can actually put your stop loss just below that zone in order to be safe as well. If this candle right here ends up becoming a fair value gap, what you need to do is very, very simple. You can just execute your trade and put your stop loss below that fair value gap. It's that simple. But within this zone right here, you do not have to trade. You don't have to trade. You can equally get this sniper entry all the way up. I know a lot of people who have bought around here, which would be very, very good because this actually showed price is shooting all the way up and it's shooting all the way up massively. So there's a high chance that after retesting this will continue pushing all the way up. But if you don't know what you are doing, if you don't know how to use trend lines, right? You don't know how to use trend lines, but you understand the concept about where buyers are in the market and where sellers are also in the market. You can just ignore this whole range right here and wait for this breakout and wait for that breakout. You are good to go. You don't have any serious issues. You don't have anything to do. The most important thing or the most important reason why we are waiting for those breakouts is yes, despite price is now shooting all the way up, we can obviously also tell that yes, this right here is the last order block, and below this zone was also the last what order block. So yes, in any case price is within this zone right here, there's absolutely no reason for you to execute a trade. There's just too much of a lot of things happening within that zone. You have fair value gaps being taken, you have other blocks being respected. This indicates either price is going to be in a consolidation or price is going to start ranging very, very soon. So in order for you to avoid that range or for you to avoid a possible consolidation, you don't execute a trade within that zone right there. You just wait for a break, execute, execute, and that is it. So that is what I'm going to be doing currently. I want to add to my trade on gold right here. So I'll probably have to wait. The price breaks above and I'll just execute my trade. You can obviously see that this is the same high right there. Extremely easy to find. You don't have to stress yourself that much. So when price breaks above it, I can just go ahead and execute my trade. But if price doesn't, and we finally have this trade too, if price rejects and breaks through this zone, I'll be selling. I'll probably be looking for price dropping maybe to this lows or just pushing through this lows right here. Yes, but because we are in an uptrend, we actually look forward for price breaking above this as compared to this. This is just going to probably just be a reaction or a rejection, but this is a continuation. So this is actually quite good as compared to this. But so far so good. You don't have to trade within this zone right here, especially if your account is small. You don't really need to have a lot of pullbacks. You don't have to do that to yourself. Just ignore it and be free. So let's see what happens next with these trends right here.
A few moments later.
All right, so it has actually been hours. It has been a lot of hours, right, before price finally push all the way through. Obviously, as you can see, we now have the candle that is just broken through the range right here. I've already said it, within this zone, you don't have to trade. You just don't have to trade because there's a lot happening within this area. Now, if you go to the 5 minute time frame, this is what you are going to see. Just look at what you are looking at. Just look at this right here. I think it started from here, that was around this zone right there. So you can obviously see that we just had a serious amount of price movement, right? But none of this actually shows a tangible trend movement. It's just this range that price started to show a serious trend movement. You could have actually gotten a trade here, but remember, we are still waiting for price to take out this high right here before an execution, right? It's that simple. So with you doing this or with you actually setting this for yourself, you eliminate the reason to execute unnecessary trades. You see that around these zones right here, when price did not actually close above, we did not execute a trade. There is no need for you to execute a trade right there. After that is done, you can now come to either your 5 minute time frame or your 1 minute time frame and you execute your trade. Now, the only thing you need to do is just look at the last trend that actually took out this high and probably either put your stop loss below that zone, or you do what you try your possible best and find a fair value gap just to put your stop loss below it, because that is actually a what the level price can actually come back to. So yes, I'm currently still holding my trade, which is down here. I'm currently still holding that trade all the way up. Price is still pushing up, so there's no need to close that. But this is where a lot of traders get it wrong. You see, we now have a breakthrough. What most traders are going to do is wait for the next session to open or for the next session to begin for them to start executing their trades. When we have buy limits or buy orders that you can just place and you'll be free. In any case you are not available at that moment, it's going to get triggered. I do this a lot, especially if price hasn't given me an entry yet. I could just put that and I'll leave it. But you have to also note that you just don't put it above the high for price to pick it and go. You always have to wait until the breakout is completed. you can just put your trade right there. So another mistake I have to point out is, you see, when traders actually or finally find this type of entries, like for instance, around this zone, that right there was a very nice change of character. Market structure shift. We know price was shooting up. These consolidations right here with this push, a lot of traders who have executed a 0.01. I've said it countless times. No matter your loss size, or sorry, no matter your account size, once you get a short trend movement, make that loss size double, triple, or quadruple it. Just make a lot of money from a little bit of a move, take out some partial profits, and you'll be okay. You can now allow that 0.01 loss size to actually push through. So within this zone right here, just from this range, someone could have actually executed, let's say, so let's say 23 loss size, right? So someone could have actually bought just within this zone right here, someone bought about 23 lot size, and price just short. Look at the place prices from here to this zone right here. Now imagine how much that person will be making. Yes, indeed, there's also a high chance that that person is going to lose a lot of money if price goes in the wrong direction. But look at this. This is the end of the level that he's actually targeting price shouldn't go through. That is just 2k, let's say 3k. That is just 3k, right? Because it's 2.7, right? But that is just 3k. Now imagine if you are just going to make this amount from this small move. That's why you see most of traders, they don't really stress themselves or themselves a lot, because they just come into the market, find a sure move. What is a sure move? A move that actually signals that it is going somewhere. You know, price is pushing from here to here. You know it for sure. Every trader has this type of moves that we know. You know this for sure. This is the type of move that you scale in more, that you triple or quadruple your account size, and you just get out, just scale out and be free, right? So yeah, that is what happens, and a lot of people don't do that, right? Now obviously we finally broken out, we're already in an action, we know price is going to continue shooting all the way up. What do? We put our limit orders. So when you look at my entry below this zone right here, you realize that that entry, I just executed a very small loss size, right? Why? Because price was currently just around this zone right here. We're having a couple of rejections, so I executed a smaller lot size because I don't really want price to push back, take me out of the trade, and I don't know what is going on next, right? So yes, that is basically the reason why I executed that trade or that lot size right there. But currently, I know price is continuing to shoot all the way up, and we've just broken through a major high. So I'll be executing 7 lot size, and I'll just be putting it just a little bit above this right here. Of course, price can actually open and jump this um order right here. Price can actually open and just jump that order and just continue shooting all the way up, right? But yes, we also know for sure that price can pick it and we just continue. So this is if I'm not actually going to be on the charts. If I'm not going to be on the charts, this is what I do. Where should I put my stop loss? Basically, just around this zone right here, because currently we have this massive push. We don't have any sellback. So we might have a sellback when price opens or when market opens. But that is not the case. The case is, you know, price is shooting all the way up. When we have this type of newer highs being created, it's very hard for you to cope with the trend because you don't necessarily have a reference point. And a normal circumstance, if price is below this zone, just like this, we have a reference point because we know this a high that price might want to take. But if price is above these highs, there's no reference point. Price is just creating newer highs. It's very, very hard for you to track, right? That is it. So you execute your bigger lot size and you also execute a smaller lot size just to keep the trend going. So normally I do execute a bigger lot size and just a 2 lot size. My account is fairly big, so I can actually do this. But if your account is not big, just use a broker that supports scaling out of some trades, right? So that you can take partials and just allow the trend to actually continue pushing all the way up. But yes, that is just it. You add in another trade right there when price starts or when the market opens. You have to come back and look at it whether your entries have taken, or just check through your phone if is triggered, you know. If it's not triggered, you can come back inside and execute your trades. Because if the trend actually took off around this zone right here, we have a jump from here to there, it might not take your trade. So you have to manually execute your buys above. But if it also drops back down, you also have to look forward for entries again.
6.5 hours later.
Alright guys, so it's the next day of the trade that I actually took, or the trade that I actually left for price to take. Obviously, when you look closely, you realize that we did drop. So price did not actually take this trade yet. As you can see, we had a drop, right? So price dropped from the initial level that I actually wanted price to take. Price dropped back down just to retest the last order block of this trend right here, and it initially come back up and did what, and pick the trade around this zone right here. So you can see the difference, right? Price dropped back down, did not pick the trade. You can see we dropped back down, we came back up above the level that I was actually talking about, because we know above this zone price is just going to shoot all the way up, and you can see the price just continued the upward movement. So that is very, very nice. Price did not really do anything serious, just a drop, come back, pick our trade, and off you go. So we don't even have a drawdown like that. This is the current trend movement. Around this zone, we're already in about 12k on the bigger trade, which is the 7 loss size. And this smaller trade right here, we are about 3k in profit already if I push it all the way to this zone right here. So yes, this is what is actually happening. You can see price has just shot all the way up very, very massively. So this is why sometimes you can just choose and put the entry right there. I said it yesterday, even price did not take it and it drops back down, it will manually have to come back, and or you have to manually come back into the market and pick it. But unfortunately, I wasn't in the market around that time, so I just allowed it to run. And because I know price was going to shoot all the way up, I just left it like that. And you can see the price did drop back down, give us another what nice break right here, came back and picked the trade. Now it's not only this, I also use the same method on what BTC USD. As you can see, the the first TP on BTC has been taken. I just kept the second trade at break even, and that is it. You can see that it's also the same thing. Price broke through that high right there, came back for a retest around this zone, just around this level right here. Executed the trade. Stop loss goes below this zone. Targets just above this zone right here. We're targeting this. So this right here should have actually been the second TP. Price hasn't gone to it yet. So far so good. You just have to be vigilant, have to actually put it at break even. You can see the price just came back down. It did not break it though, but it came back down. I think I'm very lucky with those TPs, or with those second trades. You can see that I did not break it here, neither did it break it here. It's quite close to my SL, but it doesn't really pick it right. So yes, you have to be vigilant, and you have to actually bring this to profit. I actually wanted to bring it in what 3k in profit, but let's just put it around here. It's alright, because this is a lot of buyers around this zone right here. So yes, both of those trades were quite magnificent. I have to actually take my time with this trade right here, and I'll be taking this profits just around this zone. I'll probably leave this small trade to continue running, but this big trade, I just have to close it right here and probably right now, because it's a bigger trade. I don't have to waste that profit that I've actually gone already. I've said it a countless times: when you are in a trade and price has given you marvelous profits, please just get out of the trade and be free, right? So around here could have actually been a nice zone for me to take my TP, just around 12k. But I've already seen that price has already had a couple of rejections just above that zone right there. So I'm not really going to have any problem waiting for price to be doing all those rejections right here, when I already know I have another trade running. So there is no problem. You can always just come inside and close your trade. and just wait for the last trade to actually push through. Now, if you are someone who couldn't actually execute two trades or who couldn't actually execute bigger lot sizes, you can actually just execute, let's say, two lot size, and you close one, just go to your partials and take some partial profits. So if this was you and you executed seven lot size and it is just one trade, you could have just clicked on it. If your broker allows partials, you just click on it and do what? And take out, let's say, four lot sizes, leaving only three lot sizes, right? Now, the amount that you are getting is going to be reduced, but it's going to be worth it because you're not going to have that thing that you wait for price to push again. You're not going to have it in you. Now, obviously, yes, price has actually swept through my TP, and that is nice at 12K. So TP1 hit. And this is why a lot of traders have problems, right? You don't have to be in every single trade, but when you get the good trade, you don't also have to execute smaller lot sizes. So you see that I wasn't in any of these trades right here because it wasn't really a good trade to actually execute at that time. But what did I do here? I know it was just going to shoot all the way up. So I executed, and you can see that everything went smoothly. And because I executed big, I win big. It's that simple. So we take this to 1K in profit as well, and we actually just hope for price shooting all the way up. I still have my trades running below this zone right here, about 32K in profit. That is only one trade. I've closed every single trade that I had on this, except for this trade right here. I'm still leaving that one to also run a little bit because gold is just shooting all the way up and it's marvelous, right? So we are about 4K in profits on this trade as well. We are just about 4K in profits, and yes, that is extremely good. That's extremely good for this trade. You can see what is happening. So let's just go to 2K in yes, this is alright. Why? Because we're actually using this last low right here as our leverage point. So when price comes back, we want it to bounce off this rather than hitting our stop loss. But yeah, that is just it's not really a big deal. You can see that BTC on the other hand is actually getting close to my stop loss, but we've already taken first TP around this zone. First TP was around, I think, this level. I did not actually reach this. It was just around this level, about $800, right? But this is the second TP. If we do not get hit, there's no problem. You can still watch out for this trade to continue shooting. Yeah, we have a couple of rejections right here. It might not get hit. But yeah, that is just it. That's just how you trade. You try your best, you listen, you understand, you execute your trade. You can see that yesterday it was quite a very simple thing. If price breaks above this, you buy. If price breaks below this, you sell. And price did not do any of that within this range. So you wait until the breakout. Now, because this actually happened when the market closed, so I had to put my entries right there. Price dropped, it did not pick the entry, came back up and pick it, and as you can see, shooting all the way up. Very, very simple. You don't have to stress yourself. I'll see you guys in the next video. Thank you guys for watching.